Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Peter McGuire, CEO at XM Australia, joining in. Welcome to the show, Peter. It's always a pleasure to have you speaking to us. Peter, my first question coming to you is the last time that we spoke as well, there was a lot of resilience with regards to how crude would move from here on. However, now first let's start with the dollar index because clearly there is some bit of pressure that's building in on the dollar index, and that's what is having an impact on the commodity market as a whole. What's the sense that you pick up with all the stimulus packages that are being announced worldwide?
Well, it's lovely to join you, Hiral, and I'm greetings from Sydney, and it's a pleasure always to speak to my dear friends in India. Now, first off, that US dollar index still around that 90.5. It's a market that I look at first thing in the morning because it represents so many different components as far as global appreciation of what's going on the big scene. And that's really what I hang my hat on before I even look at US equities. I always look at the US dollar index. Now it's at 90.5. It was massively bought up in March and then it peaked at 103 in April about 10 months ago, and it's fallen 13% since then. So I feel as though it'll stay around these sort of numbers. We might see a little bit further upside, as you mentioned, regarding US dollar and stimulus. But at the moment, I just think it's possibly range bound.
Right. And then with this, if you see the way the pound and the euro have been performing, the pound has reversed the shortfall of the last couple of sessions, and euro
Yes.
seems to be pretty much in a sideways consolidation. Is this the trend that you expect would continue?
Well, that euro, I'll go to that one first. It's still range bound around that 121 level. I've been conscious as that as far as 1.21 seems to be goes down to 19 and a half, up to 21 and a half, and very range bound, very tight. And we haven't seen a lot of breakout on either side. So from a trading perspective, unless you're doing option strategies, it's very, very range bound. My mind now goes to the UK pound, and that's been one-way traffic. We're nearly at 1.4, and we've been as low as, over that period, the 133s, 132s with Brexit. We've had a lot of things going on in the UK, and it's really now starting to power up at that 1.4 sort of number. Now, I don't know how much more horsepower it has, but at the present, it seems to be onward and upward for the cable.
Right. So with this now, if you have to look at what's happening in terms of gold and silver, what would you look at? Because let's start with gold right now. Clearly, the recent rally that we've seen and the inflow of capital that has come in, it's clearly changing the fundamental outlook for bullion as well. What's the sense that you're picking up? Because it's pretty volatile right now.
Absolutely. Volatility, if you're looking at this month, we're now on the 19th of February. On the 1st of February, we're around about that 1860. Then within a matter of days, we're all of a sudden at 1790. Then we're back at 1845. Now we're back at 1774. I'll say three things. From a trading mindset, it's an incredible market to be involved with as far as gold because of those big swings. They're whipsawing moves that really create much movement and, again, opportunity to trade. So I'm going to congratulate gold as a good thing to be. Now, the next part, if you're looking at long-term value, I'm still buying that argument that I truly believe that gold is going to be a lot higher than where we are at the present time. I think there's a lot of uncertainty as far as central bank policies, what's going on geopolitical themes globally, and the other side, where does that US dollar trade? So, and I've got to say this, and I very rarely, Hiral, make reference to it. You could go back and through all my interviews, Bitcoin. And what is the storyline? I'm not here to talk about crypto, but I'm just saying it's had an enormous blowout as far as movement to the upside in the last 3 to 4 months. And that's creating, again, I think a lot of, I won't say nervousness, but certainly a very close eye as from all central bankers are very, very focused on the crypto story. So gold, yep, we saw that silver story a couple of weeks ago as far as a big move to the upside, and we thought that it was going to mirror image what GameStop was and AMC and a number of those others, and it just hasn't performed at that sort of level. it's still at that $27 handle for silver, but we haven't seen the $35s and $40 yet.
Right. So with this, clearly silver markets have been in focus right now after the import duty on silver has been cut to 7.5% in India. Now,
Yeah.
even though there was a cut on the import duty, the commodity has seen volatility post the budget. So
Yes.
between gold and silver, where would your bets be?
I look at, again, a couple of different points on that. I look at that gold to silver ratio as far as big brother and little brother. It's always, or father and son. That ratio is a long-term historical average that is really, I think, what first traders look for. They look for where is it on that average, not only a timeline, but the volatility off that long-term average. I think I'll go out on I think there's possibly, in the short run, you might see a better run on silver, but I think both will be in tandem and lockstep as far as over this decade. You can't get away from one, stimulus. Secondly, the possibility as far as inflation. And thirdly, no return on your money due to very low interest rates across the majority of first world economies. If you strip out inflation, and you look at what the long-term average is, Japanese, Swiss, look at what's happening in UK, Euro and US, and throw Australia in there, then the reality of the matter is that really we're all getting a negative return on bonds. So that's why the equity markets, Hiral, have been just one-way traffic really since, April, May last year.
Right. So, when we're talking of, between gold and silver, as you mentioned, you take them as a little brother and the elder one. If you have to take a shorter term perspective, would you prefer silver? And if it has to be gold, would it still continue to always have that attraction from a longer term perspective?
There's no doubt that the gold will always have the huge attention, because if you look at economies, China, India, Middle East, you name it, Africa, South America, everyone, and Asia, gold is part of their, not only their portfolio, but it's a belief system going back millennia, thousands of years that we've been engaged and sought that gold wealth. And there's still a lot of people that don't have bank accounts and have gold somewhere hidden in the house. So there's that side of it. As far as silver's concerned, industrial demand, we all understand the big picture. So I think, yes, silver's got a little bit more opportunity, but I'm not going to rule out gold in any fashion or form, though I truly think that you'll probably see continued volatility for a number of these markets in the short to medium term, quite simply because of the trading opportunities that represent the simple as that, Hiral, the opportunities from, those big whipsawing moves. Traders just love those sort of breakouts.
Absolutely. And Peter, with regards to crude as well, I mean, it's a very different view that everyone holds. We've already reached that $60 per barrel mark. We were anticipating that $50 would be, the peak that we would probably see. And now with crude at $60 per barrel, is this something which is sustainable according to you?
I think a couple of things on that as well, Hiral. I think it's defied logic in the sense where we were at the end of October. It's up the best part of 55% since then. So that, November, December, January, half of Feb, a huge move to the upside in that 110 sort of 115-day time horizon. So any market, you've been around the markets a long time, and you appreciate that you talk about crude oil up 55% in 3.5 months. That's explosive. Has it got more? I still believe that 60 is a psychological handle that if I talk to, and I've talked during the week to, the big networks and the likes of Gulf Intelligence out of the Middle East, and we do these webinars with industry experts from all around the world, and everyone seems to think that 60 handle is about where we are from a max perspective for price this year, unless we see a blowout, be it Mother Nature event, geopolitical shocks, something happened off the out here somewhere that no one's thinking about, left of field, to affect US dollar. If you see a breakout or something dramatic, then you might see another leg up from here. But I truly think that we're fully priced at the moment. And again, it's been an enormous trade. It's been an exciting trade. And you know that I've been I closely watch the crude market. It's been absolutely one of the greatest trades that I've ever seen in the last 3.5 months. One-way traffic. And I think that it's a bit exhausted now. I think, as well as I do, markets get to a point and then they run out of steam. They just go, hang on a sec, I've moved now. That's what trading is, Hiral. You've got to find out the ones that have got the opportunity to move. And the ones that are tired and the ones that are worn out, and that they just need to go to the beach, those particular trades, and you have a rest and they sit down and have a sleep and they let the other markets take over. Look at copper, look what's happening with silver, gold, crude oil. Then you're looking at the equities. Have a look at what's happening with US dollar. All of that needs to be examined to identify and seek opportunity from a trading mindset.
Right. So with this, when you're talking of crude as well, do you think the trajectory is going to remain intact, barring a few odd aberrations here and there?
I think I'll go out on a limb. I think it's pretty well priced. I don't think there's much more upside for it. There might be a couple of bucks, but I'm concerned. Hiral, we've got more oil than we need as far as global production. So there's the first part. The second part is we've still got varying degrees of lockdowns across the world, which in turn creates a demand destruction mindset. Is everyone, I'll ask you, because I know I can give you the answer for Sydney and for Australia. We're coming back up the curve as far as consumption, but we're still nowhere near what we were because a lot of people are still working from home and their demand picture or their personal demand is a lot less than what it was with crude oil or their energy consumption. Are you seeing the busy streets of Mumbai back to what they used to be? Are they? Is India engaged again as far as mobility and people racing around on motorbikes and cars and trucks and buses? Is that back to to its normal 2019?
Pretty much back. In fact, it's increased.
Well, I'm sure it has. Well, it's increased because three things. First off, you guys have got probably one of the fastest growing economies in over the next decade. It's your decade. I keep on saying that. I think it's your century. Secondly, there is no country in the world that strikes me with as much passion, but more importantly, it's youth. It's just beautiful. I've got a couple of kids that are in their 20s, and and I've spoken to you about that. As far as children going to university, they all want mobility, and India has literally tens of millions, if not hundreds of millions, of young people that are engaged and technology and just they want movement. Young people move. They want to ride motorbikes, drive cars. They want to do stuff. And that all comes down to the consumption patterns as far as crude oil, electric engines. Tell you what, you wouldn't want to have an electric car at the moment if you were in Texas, because I don't think you'd be driving it very far. You would have no electricity. So maybe that's a little bit of a wake-up call as well. I think we need, and I heard something today which is quite interesting and a fascinating story in itself as far as coal and coal-fired power plants. The world's going, a green energy revolution, and we're all saying, oh yeah, let's go. And you've got China building more coal-fired power plants than everyone else in the world, and their consumption is going to be absolutely off the charts. You understand Mongolian coal. You understand what's happening as far as Australian coal being shipped there. So they realise that they need power, and electricity needs to be from coal. So I'm still not convinced that everyone is on that bandwagon.
Right. So Peter, if you have to look at 2021 as a year with regards to crude, OPEC has come out and said that the world oil demand will rebound more slowly than previously thought. And they've added to a series of downgrades on the back of the lingering impact of COVID. according to you, how are you expecting the demand scenario to pan out in 2021? And with the kind of cuts that OPEC has already taken, do you see an extension, or do you see them, restructuring those cuts from here on?
I think it'll be restructuring the cuts. Look, OPEC are playing this as a I'd say a minute-to-minute scenario, but it's certainly day to day. They're conscious as far as consumption. They're conscious as far as the demand picture. They're conscious as far as lockdowns. They're closer to Europe than I am. I mean, their headquarters are in Vienna. I go there and I sometimes call you from Vienna, and where we have the meetings, and there it is. I understand what's happening across greater Europe, still with that lockdown, what's happening with Germany. So I still think that OPEC will do whatever is required, and they all want to see that energy price around about that 55, maybe 60, maybe a couple of bucks more. And whatever's required, they will do that, because they've got all those nations that supply crude all need, funny enough, a higher crude price, because they've got their own budgetary constraints, and they all need to make a dollar. And they've been used to making a good dollar. And we even think, here we are in 2021. I put my mind back. I was in New York the week where it hit 147. I was over there speaking at the New York Stock Exchange in 2008, and that was in late June, early July, and that was 147. And here we are 13 years later, and it's at 60. So crude oil is such an incredibly volatile commodity. It's a commodity that we're all addicted to, and I don't think that storyline is necessarily going to dissipate or evaporate over the coming years. And I think your precise comment as far as the young people and what you're experiencing in India now, and you said there's actually using more and there's more engagement, is not surprising. When I'm in Mumbai and I see your underground railways and I see all of the construction and the tunnels and the bridges and the new roadways and the cranes, that's crisscrossing the nation. So that tells me that they're going to be using more cars, not less.
Absolutely. In fact, Peter, with this as well, with base metals, what's the outlook that you have? Because a lot of positive views coming in for copper and iron ore.
Iron ore is a huge component, as you know, as far as steel production, and everything needs steel. If you're going to build, you need electricity and you need steel. So I think that there's, again, great demand picture across the world for a rebuilding phase, because think of this, Hiral, you want to prime or to support an economy or to inject stimulus. You want to really inject infrastructure spend. You want to turn countries, get a new airport, get new roadways, get new bridges, get new tunnels, get new transportation hubs, get new underground railways. I ride sometimes the trains in Mumbai, and like Sydney, some of them are very, very old. You need an underground rail system that crisscrosses that magnificent city of 20+ million people. Everyone, if you use Tokyo as a test case, every city in the world really should be send your transportation people over to Tokyo for 2 or 3 weeks. Let them catch 100, 150 trains. Let them see what trains, how they work across a mega city of nearly 30+ million people. And that gives you an indication of where the real world needs to travel. And there's literally hundreds of these cities across the world that need to engage iron ore production, iron ore consumption through steel, and their addiction as far as copper and other base metals.
Absolutely. Hoping that's how it pans out. Thank you, Peter, so much for joining us on the show. Pleasure to have you as always, and hoping to see you soon again. Thank you so much, and stay safe.
Thank you, Hiral. It's a pleasure to join you, and all the very best to everyone in India.
Thank you.
God bless.